Hi everybody, welcome back to the channel, and today I wanted to talk briefly about the JP Morgan Nasdaq Equity Premium Income ETF. This is definitely one of my favorites. Real quick though, check out Daily Investment Advice if you're looking for free education, insights, recommendations. All of this is free on our website, dailyinvestmentadvice.com. You get access to all of this stuff because I personally believe in providing content that can help investors from all around the globe. You'll see we have different languages you can choose from, depending on where you're from. With that being said, definitely check it out, guys. I'm very passionate about providing great education, and I think it's a great resource, especially if you might be new to the markets and you're learning about the stock market. With that being said, let's talk about the JP Morgan Nasdaq Equity Premium Income ETF. JEPQ is the ticker symbol. This ETF came around, you'll see back in 2022, it was trading at $50 per share. Now it's trading at $53.68 in 2024. So with that being said, you're not really participating in a lot of the upside of the S&P 500, the Nasdaq, all of the major indexes over the long run. Because if you look at the Nasdaq, for example, if you look at just the Nasdaq composite over the last year alone, it's up 34%. But this ETF in particular is not up nearly as much. It was up like, I think, 15%. So if we go back to the JEPQ ETF, you can see here that the ETF was, let's see, up 20%. So you're still getting some of the upside, but you're not going to participate in all of the upside. What this ETF is good for, though, is when it comes to dividends. If you look at the dividend yield of this ETF right now, we can look at the dividend history and kind of see what we're looking at in terms of passive income. Keep in mind this does pay on a monthly basis. You'll see that dividend yield of 9.57%. So although you're not going to be participating a lot in the capital appreciation, or I should say as much, in terms of, let's say, the Nasdaq going up 30%, you might only get 15 or 20% of that upside, just as an example. You will get, however, a solid passive income stream. Okay, so you're going to be getting every month dividends paid to you on a monthly basis. And you'll see here that, let's say you had 1,000 shares. Okay, so for every 1,000 shares you have, you can see that they paid out 0.42. I'll pull up my calculator here. 0.42728 times 1,000 shares, and it's going to be about $427.28 to be exact. Same thing here. You'll see it's a variable amount, but 1,000 shares would be roughly a $50,000 investment. So if you take that amount and just come over here, instead of actually buying the ETF outright, you could, let's say, sell a cash secured put option, and you're going to buy 1,000 shares. We're going to try to get filled at the midpoint. And what this is doing basically is we are trying to collect passive income for buying the stock. We're not just buying the stock outright because we're not going to get the passive income. What we're doing is instead we're just collecting the premium, right? $53 per share is the strike price. We're going to get long at that price. 10 contracts is 1,000 shares because each options contract is multiplied by 100. And so what we're doing is selling a cash secured put to get long the stock at $53 per share. And then what we can do is actually turn around and collect the dividends if we get long the stock. And so coming back to this page, you'll see 1,000 shares, let's say, gets $427 in dividends. But before that even happens, we're going to go ahead and buy this stock and get paid for doing so. In this case, if we take the midpoint for 10 contracts, that's only around $50,000 in capital. We're already collecting $663 in passive income. And that's just for being willing to buy this stock at a discount already. Over the next roughly month, let's say 5 weeks, you'll see that you're getting this passive income right here, this cash flow. And once you get that cash flow, like I said, you can turn around and then start collecting those dividends. And then, if you want, you can turn around and start selling covered calls. So it's the same process, except you actually own the ETF in this case. So you have the wheel strategy at play, as well as, let's say, in this case, this is in the money, so it's going to be valued more. But if we take like the $54 strike, for example, and try to get, let's say, a midpoint that's out of the money, you're going to get roughly the same amount for that call option as you would for the put option. So right around that strike price and right around where the market price is trading, which is right around $53 to $54 per share, you're going to get those premiums from the options if you're, let's say, selling a cash secured put and then selling a covered call and turning around and doing the wheel strategy. In addition, you have these dividends. So to answer the question, how much do you need to retire on this ETF? Maybe not as much as you think. Obviously, everybody's circumstances are different. You have to consider your own individual risk tolerance, investment goals, and what you're trying to accomplish. But if you actually wanted to generate enough passive income to pay your bills on this ETF, what's really interesting is that you might not need as much as you think. And so I hope this kind of explains things, guys. Thanks so much for watching, and have a great one.